Welcome back to Alpha Recap. I'm thrilled you're with us. We closed out the trading day and there's a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. We saw a classic risk-on session after the close. Large cap tech led, materials and semiconductors outperformed, and small caps lagged behind.
So, what really stands out here is the gap between the big indexes. Walk me through the headline numbers in plain English.
Sure, the S&P 500 closed up about 0.4%. The Nasdaq 100 climbed roughly 0.9%. The small cap benchmark finished down about 0.3%. Big cap growth beat small caps today, plain and simple. I mean, when you step back and look at this, the tape looked like a mid-cycle rotation. Money moved out of the most rate-sensitive defensive names and back into cyclicals and growth.
Right. And the other thing is, what pushed tech and materials higher today?
There were three main drivers. First, chip and supply chain headlines improved. That gave semiconductor stocks a tailwind. Second, materials and mining names showed momentum on expectations for commodity demand and some deal flow. Third, company-specific news created winners and losers that amplified sector moves.
Yeah, that tracks.
For example, retailers got a lift after a beat and raise from Levi Strauss, and miners rallied as base metals names caught a bid. On the flip side, a big drug headline knocked healthcare down.
Hold on, say that again?
Sure, AstraZeneca plunged about 9% after adverse news tied to a heart drug. That was the standout negative, and it showed how quickly headline-driven safety updates can reprice a large-cap healthcare name.
Not a great day for that part of the market.
Nope. But Levi Strauss topped expectations and raised its dividend. That underpinned rallies across apparel and some consumer discretionary peers. So you had pockets of real idiosyncratic strength and weakness. Right. And the other thing is how concentrated leadership felt. A handful of mega-cap tech and semiconductor names drove outperformance in the Nasdaq 100 relative to the broader S&P 500.
Can you explain, for listeners who aren't market pros, what we mean by concentrated leadership and why that matters?
Absolutely. Concentrated leadership means a small set of big companies account for most of the gains. It matters because index performance can look healthy even when many stocks are flat or down. So breadth. The number of stocks participating in the rally was mixed today, suggesting selective buying rather than broad conviction.
That makes sense. Give us a quick sector-by-sector snapshot. What stood out beyond tech and miners?
Industrials did well, especially names tied to chips, aerospace, and factory automation. Materials were notably strong. Miners and base metals producers rallied. Utilities were mixed, reflecting the risk-on tone. And real estate saw pockets of strength but remained headline sensitive. Energy was uneven, and financials reacted to a wave of M&A and activist news, which made banks and regionals choppy.
So, that helps explain the rotation we saw. Anything else on notable movers?
Yeah, a few calls out. Besides AstraZeneca and Levi Strauss, a high-profile analyst reiterated a negative stance on Tesla with a don't buy theme, which added to tech dispersion. Some software names like Intuit struggled amid payment and fintech concerns, and Amgen remained choppy after first-quarter positioning and pipeline debate.
Analysts love to keep us entertained.
Honestly, I was a bit surprised by how much the chip and materials story dominated. But when supply improvements and deal flow line up, traders lean into cyclicals. Now, looking beyond individual names, the macro calendar was clearly a backdrop today. Traders are positioning ahead of a string of inflation prints and labor market data in the coming days.
So what are the two big macro questions the market was trying to answer?
Two big questions. One, is inflation trending toward the Fed's target without forcing another round of aggressive rate hikes? And two, can growth remain resilient enough to support corporate profits, even if rates stay restrictive for longer? Price action suggested traders were leaning toward moderating inflation and less aggressive tightening, but that can flip quickly if data surprises to the upside.
Right.
Analysts note that any upside surprise in inflation or unexpectedly strong payrolls could reprice rate expectations and shift leadership back toward defensives and rate-sensitive areas.
Quick one, crypto and commodities. Mixed, right?
Exactly. Crypto was mixed. Bigger tokens showed selective strength, while smaller ones had realized volatility. Metals were firmer, supporting miners. Energy was uneven as supply queues were balanced by demand uncertainty.
Short reactions. Right. Yeah, that tracks.
From a technical and flows perspective, momentum indicators favored large cap growth into the close, and volatility measures were relatively subdued. ETF flows continue to matter. The NASDAQ 100 outperformance shows how a few mega-cap names can shape headline indexes, while the small-cap lag suggests reallocation towards stability ahead of key macro prints.
History tells us anything about this kind of move?
This pattern, semiconductors and materials outperforming while small caps lag, is classic mid-cycle rotation. It often means selective risk-taking. Investors prefer companies with clearer earnings visibility and stronger balance sheets over more rate-sensitive small-cap names.
Okay, Ryan, wrap this up for listeners. What are the clear takeaways from today?
Takeaways. 1. Large cap tech and cyclicals led the session, while small caps lagged. 2. Company-specific news drove big dispersion. AstraZeneca's sharp drop and Levi Strauss's beat and dividend raise are prime examples. 3. FedWatch remains central. Upcoming inflation and labor data are the next key catalysts. 4. Breadth stayed mixed, signaling selective buying rather than broad conviction. And remember, this is market analysis, not investment advice. Analysts note trends and catalysts, but individual decisions depend on your goals and risk tolerance.
Perfect. Thanks, Ryan. Great context and very clear. If listeners want to dig deeper on any of the names or themes we talked about,
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
that's it for today's Alpha Recap. Thanks for tuning in, and remember, the market's closed up for some, down for others, and the story is still evolving. See you next time!